So with the Fed aggressively raising interest rates in the past, and now we're starting to cut right now, there are different cycles that Ray Dalio talks about here, and here are the 7 different sections here. We could talk about where we are right now, from the early stage to expansion, to the top, to the downturn, to the depression. Where are we right now? I'm going to walk you through that as well too. I'm going to be talking to you about also something happening right now underneath the surface, or when it comes to the unemployment rates from here. Also, and then we're also going to be talking about the actual markets right now, why you need to be very cautious about what's happening here with the markets overall. So I want to cover actually a lot of things with you. Also the fear and greed index, guys. It's just a lot of things that I want to cover through with you today. Because I think right now, actually I do know right now, it's very, very dangerous where we are right now, from a short-term perspective and a big macro perspective of understanding where we are in the cycle of things. If I look at the actual short-term perspective, firstly, the short-term fear and greed index is at greed, and we're soon going to be pinking. We're soon going to be popping into the extreme greed soon. And one of the really big things investors do all the time, they do the opposite, right? So smart traders, professional investors, understand this one sequences of events from here, right? And that is when there's a lot of greed down the bottom here. This down the bottom here is extreme fear, right? So down the bottom here, we have a lot of extreme fear. This is when you need to start being greedy, right? So one thing for you personally is that, what were you thinking back a couple of months ago when the whole tariff situation was? And there was a fear. Were you sucked into the media? Were you sucked into your emotions? Were you sucked into, oh, this is the bottom, that's it, this is the top, the market's going to continue crashing? Or were you down something else, right? The reason I'm saying this, because this happens at least every single year, at least once a year, I notice this happens. We get a drop of 10 to 15%, maybe more, right? There's a recession fear, the fear and greed index pings into the extreme fear. And most of the time, those 15+% corrections, 10 to 15% corrections, turn into amazing buying points for the year. Most of the time, they don't turn into bear markets, and this is the exact same thing here. I personally was doing YouTube videos calling this is the greatest buying opportunity point we've seen in a long time. And so the person who's saying this here is, I'm trying to share with you, my job as a coach for you guys, okay, is try to coach you about how to understand these markets on a more of an emotional level, so you can not let your emotions get hijacked by the media, by the headlines, and all that sort of stuff, because it's going to hijack you in doing the wrong thing. One of the hardest things about trading the markets is everything is opposites in the market. So if there's a lot of fear in the markets, right? Like for example, if we end up going to war, that is actually bullish for the markets. Go back and look at the last, 20, 30, 40 years. And every time we've gone to war, the market's been coming down for a while. And when we go to war, the market goes through a big boom. So everything is opposite in the markets, do you think, right? So right now, the purpose of me saying this is that if we look at the fear and greed index, we're starting to get greed, right? We start to go down to looking at this is the daily charts here, and look at the S&P 500, and now look at this big, massive move to the upside, big, massive vertical move. So there's starting to be a lot of greed around this marketplace here. And my job as a coach for you guys, is to not stop you, is to get you thinking in the right way so you can be prepared for what's coming. We do know what's coming out of the markets on a short-term level, right? We're going to get a really good, hard and fast, sharp pullback. I don't expect it to be a big crash, but to get a really nice, hard and fast snapback around here, I am expecting to see something like, we may get a little bit more push to the upside, which is going to push the fear and greed index into that extreme fear. But then my job as a coach is to teach you about what's coming. I don't know exactly when that's no one knows the exact day, but my job is to get you prepared for what's coming. So when that coming, which is probably a little bit more to the upside, get that fear and greed index potentially into the extreme fear, and then we're probably going to get something like that. And then guess what's going to happen, right? And then what's going to happen here is the fear and greed index is going to probably push into the extreme fear, extreme greed. Then what we're probably likely to see this thing come all the way back down to here, and then that's probably going to be our buying point. Because I do see on the short-term level here, I do see when it comes to, this is the S&P 500, this is the NASDAQ, and the Dow is now starting to play a bit of catch up as well too. So they're all starting to expand from here. And even the Russell's also trying to play catch up. Poor Russell. It's like, I'm laughing anyway. For you guys last year, you guys know why I'm laughing. I used to say King Russell all last year. Didn't happen. But look at where we are right now, right? And the whole thing about me as a coach is my job as a coach is to just to warn you about what's coming so you can get prepared for it, right? So for example, when it comes to gold, look what's happening with gold right now. For so long, I was actually saying all through here when it comes to gold, I didn't know exactly when, but when we started to break above, when we started to get into this level here and up through here, I started putting warning signs out. I didn't know exactly when, but I was saying this is the final leg in the bull market for gold for now. When I say final leg, I mean something like this, right? I mean that we have if this is an overall big move to the upside, we come back down, final leg of the bull market, and then we start to see this here, right? So this here is a top, the breakdown, and now we're probably likely to start to see a lot more stronger selling coming out of gold. But on the back of what I just said there, I do see gold over the next 5 years going to 10,000. Okay, that's my opinion. That's my that's what I think is going to happen. Okay, I'd say that because on the back of the inflationary spike that's going to come, I see that happening because the Fed's going to keep doing what they're going to do. I believe we're going to see another sort of what's called 1970s sort of spike. If I go back to the 1970s here, actually, I'll go back to this is the weekly charts. If I go back to the weekly charts here, I do see this 1970s type spike. I do see this even through the 90s. This is the 1970s, right? Big move up, and then we started to get a correction, right? So we had a move from bottom to top, and as you can see, we had a movement all the way down. The first big drop was what? The first big drop was down to 50%, and then we actually bounce. So anytime we get a very big bull market from here, we tend to get a 50% correction here. So if we look at where we are right now in gold, and that's why I'm not poo-pooing on gold, I'm just like letting people know that it's already had a very big move. Focus on other markets like potentially oil, the energy sector. There's other markets out there that haven't actually made a big move yet, that could be getting ready for a big move. And you want to be focusing on those markets. Don't be a lover of any markets. Focus on these markets. Like for example, oil. If oil does hold here and we start to break back to the upside, we could be getting ready for a movement on the upside. Even if it doesn't, look for a good trade on the downside if that's going to be the case from there. If I go back to my gold chart now and show you, and this is again, if I go back to my weekly charts here for a minute. So on an overall basis, all I'm expecting here with gold's had a very big move up. You can see here, see this very big, that point there to that point there. So we had a very big move to the upside. So when it comes to this here, we had a very big move up and then we had a drop, right? Had a drop to this level here. Now we're having a very big move up. We're probably going to come down to, let me show you here. So if I show you, and this is all that I'm expecting myself, right? And then there's going to be some amazing buying opportunities. So this coming crash, this coming very big drop, right? The top is here, the breakdown has started, and now the recession is going to follow. That whole thing there takes time, right? Everything takes time for that to kick into play. And so as you can see, if I bring this up to here, if you can see there's a lot of trend lines, a lot of sort of things here. But you can see here that this 50% level, look at this here. So the market came all the way back down to 50%. We're looking at a weekly chart here, right? So this takes time. Very big bull market for a couple of years. Look at this here. 2019, 2020, a very big bull market. Now we're going sideways and now we're just having a pullback. So while I'm saying the top is in, the breakdown has started already. This is actually what's happening in gold, because you can see here on a short-term level, look what's happening here, right? This ascending triangle pattern, which one of the big things I've learned about ascending triangle patterns, depending on where they land. If they land where what's happening with gold, because gold is already been in a very big move. So whenever you get these ascending triangle patterns, right, you get the sideways movement, you get that through there, you get the whole you tend to get something like that, right? Well, one thing I have found is that what tends to happen is we actually fail, and then this is actually a reversal pattern to the downside that actually starts to see this overall. And we're already starting to see the breakdown already, right? We didn't actually hold. We can see here, if I bring this down to here, right? Let me actually bring this, I'll bring this down through here. And through there, as you can see, just by looking at just the overall level, you can see here that was the resistance level, and we're already starting to break down now. This whole level of support, resistance, resistance, and now we're starting to break down. So these patterns here, the ascending triangle patterns here, depending on where, if they form where the market hasn't already made a very big move for a couple of years, then it's probably going to be, it's going to be what's called a continuation pattern. You get the move, you get the breakout, and it's going to continue that overall big bull market, okay? But if we've already had a very big move like gold, that's where we can start to see the breakdown. And if you guys were following along with me, if you haven't been, well, my name's John Howe. I've been trading the markets for 20 years, and my job through these videos is to coach you around some topics, some understanding around these markets, just to help you become a much better trader in your own personal trading. And I do, if you actually like to learn my trading system, my number one trading system I use every day, there's that first thing in the description. I give you a free training that walks you through all the details to my trading system. So I just give it to you for free. You can learn it for free. So looking at this level here, support here, and we're breaking to the downside. So because we're breaking to the downside here, we're at the top of this here. Now, what does that simply mean? That simply means we've already been in a very big bull market, right? Just like back here, very big bull market. We're probably going to go through a bit of we're probably going to go through another one of the corrections, right? So if we have a look at the overall correction, and if I'm going to be like, if I just use this bottom here to this here, now what I'm expecting, if I sync this in layout, this here is coming. Now over the next, I would say maybe next 6 months or so, there's going to be a lot more bullishness in the equity market. But now we're starting to see how we're getting the breakdown. So I'm actually expecting now gold to start to see some more movement on the downside. And if I use some more longer term trend lines from here to here, like we have that level from there to there. In fact, let's just, that level there to there. Yeah, so we can see this again. I'm just looking at some levels here that may start to come into play here. But again, with this very big move to the upside, I'm now seeing this thing probably come back down towards this level here. And this is where the top is in. The breakdown has already started. And now we're probably likely to see a lot more stronger selling out of gold. And the purpose of me bringing this up to here is that as I was doing warning signs, as we're starting to get part of this very big bull phase through here, my job as a coach is, I don't know exactly when things are going to happen, but my job is to say, hey, this is what's coming soon. And why I'm pointing here, I'm not saying this big vertical move's coming. I'm saying as this market's going to the upside, I'm letting people know this is not the start of a massive move back to up to 5,000 out of gold. We're in the last final move, and I'm just getting you ready for what's to come, which could be a sideways or on a situation where we actually come back down towards this 50 to 60% level, because that's just a nice good reset for a very big move, right? For a very big move. This is the weekly chart once again. For a very big move out of gold, and so we're probably going to come down to here somewhere. Probably going to hold through here, and then we're going to start to see, and then we're probably likely to see this very big move. And that's my whole job as a coach, right? My job is just to teach you about what's likely to come, but also teach you how I'm doing that. And all that simply means is if the market, if any single big bull market comes to an end, and then we start to get the pullbacks, the breakdowns, and so on and so forth. So if you're looking to get into something that hasn't already made a very big move, like for example, if I go to say USO as an example, right? And I bring this up to here. This is why one of the markets I'm focusing on right now is USO, because look at this here. See how USO hasn't done anything for many, many years? This is the point if you want to start to get into a good trade for the next 6, 12 months, whatever, this is what we should be focusing on from here. So hope that makes sense for you guys. Now let's go to this level. One thing I really want to sort of break this down here when it comes to the Ray Dalio's sort of expansion and cycles from here. Let me actually do this here. We can actually see here that we have so the cycles of what we see through here. The first one here is early expansion, low debt burdens, low rates, a rise in productivity, right? Late expansion, and the top. Right, central banks tighten to fight inflation, rising rates. The downturn, recession, debt services become difficult. We're starting to see that now, and defaults begin. Right, depression here, massive debt massive debt burdens get reduced. Bottom, stimulus comes in to reduce, restructure, reset, and there's a recovery, fresh new cycle from here. So I'm actually expecting, I see we're probably at the top. Maybe I would say we're number 3 to number 4. We're starting to see that already, right? When it comes to just, we know that they've raised rates and so on and so forth. So I would say that while we're probably making a top right now, and while I say that here, if you go back to 2008, this is something really massive here. So if we go back to 2008, and if we bring up the weekly chart in 2008, I'll show you this here. So generally what happens in these very big long-term big cycles from here, if you see see what happens through here. So this here is, I honestly believe that this could be part of like a 2008, but I don't expect a 2008 crash style of things. I do see a 2008, but I'm trying to show you here on a context that this is a weekly chart here. And notice how it takes time to form a top. It takes time to form a top. This is a weekly chart. So we had many weeks going up, many weeks going down, many months going up, right? We could be now sparking this here before we actually end up seeing a pullback of 20. I'm expecting 20, 30%. I'm not expecting a big, massive collapse here, right, out of the actual stock market. But the purpose here is, one, it gets very volatile at the top, as you can see here. And it's very, very interesting, isn't it? Look at this here. The 2008 was the exact same thing, right? So 2008 top, we had the move here, then we had the move down, which was down to 11%, and then we had a very big rise back up to new highs, and then that there was the top before we started to spark down. So I'm not expecting this here when it comes to that, because the Fed's gonna stop it. The Fed's gonna keep, or the whole government's gonna, the Fed's gonna, put on the brakes. The government's going to continue printing more money, so I'm not expecting this level here, right? When it comes to the to a very big drop from here. So this whole drop from here to here, from top to bottom, was about 60%. I'm not expecting that, but one thing I am expecting, whatever the top is going to be in, and I do expect we're starting to see this level here. I do expect to see probably a good 20 to 30% drop, and then a massive reflation. So right now, we're getting towards the end of that move. So this year, I'm expecting a lot more upside to come, but I'm expecting a very short-term little drop here, only because we've just done a very big move, right? And as you know, if we go up through here, we at least get these periods from here, right? So we can go up through, we can continue higher from here, but I'm expecting a very big pullback and then another big reflation, and then we're probably going to start to go into a recession or into a downturn from here. And so by looking at this level from here, firstly, on a short-term level, we've just done way too much, okay? So for you guys that are trader of the market, you're looking for buying opportunities. If you're buying right now on any markets, it is the worst time to get in, right? Why? Why is it the worst time and this is for traders, right? Traders that are getting in and trying to hold for a couple of days or for a couple of weeks, maybe for a couple of months. It's the worst time to get involved with it. Why? Because every time we have a very big move up, the market goes through pullbacks. We go through these swings. Look at this here. What's coming real soon? It's actually quite common sense when you see how this market works. We go through these swings. And the worst thing that traders do is they wait for this level here and then they get stopped out here. I'm already seeing it right now in some of my comment sections. Right? I'm seeing it right now. Oh, I'm buying call options on the NASDAQ right now. I'm like... You do know where we are. Like, just look at the facts of how these markets work. So this is that's short term. We're probably going to get a bit of a drop down. And once again, we're probably going to get a drop down to here, depending on where we're stopped. I'm expecting a little bit more pop to get this fear and greed index, bit of a pop to the upside. But then probably in the 63, maybe a little bit longer there. But then we're probably likely to see a really sort of freak out over the next couple of months. But then the last quarter of this year, I'm expecting very, very big moves. So there's this next third quarter, I'm expecting not so bullishness, but another bit of freak out. The fear and greed index is going to ping to extreme greed. Everyone's going to start to say, here we go. Trumpy and all that sort of stuff does this thing, and then away we go, right? And on a short-term level, we see that through there. But then I do see once we actually go through this freak out, that's going to be a big buying opportunity as well too. I've got a 7,500 target for this year, right? I've got a big 7,500 target for this year. That's just the target, guys. It may or may not hit. right? I just got that target. But if I see what's coming, we'll probably have a little bit more movement to the upside. Get all the retail traders who don't understand that one simple concept, that market goes in waves. So if we've been going up for quite some time, what do we want to do? We want to slow down. So, okay, the market's been on for quite some time. We do know there's going to be what's called a pullback soon. And a pullback is what? The pullback is making the trend. So while we go through here, the drop here is just coming down to create the higher low to go up through there, right? Because that's how trends are made, right? Trends are made when the market drops through here. One, it happens after a pullback, after the market go up. Secondly, that's how a trend is made. It goes up and then we get the drop to form the higher low and so on and so forth. So as we get the drop, it's forming the higher low to start to see another big move to the upside. Right now, we're not in a very big bull market, right? Look at this here, right? Look at this here, back here. What does the market do, right? Even if the market goes through an extended period of time, we end up getting what? A bit of a drop. You get it? And then up and then down and then I see what happens through here. The market has to go down through these phases. The market has to, or the market has to drop, and that's what a market, that's what an upward trend is, right? That we get the drop to form the higher low, get the drop to form the higher low. So that's what we're going to do here. Right now, we've just been in a very big bull phase through here. So there is actually no trend right now. We're in a very strong upward movement, but we're not there's no higher lows to spark that. And this is where there's a lot of risk from here. So if we go back to the Ray Dalio here, right? Current position here is the Fed has aggressively raised interest rates from zero. Tightening is well underway. Credit is harder to get. Defaults are rising, especially in commercial real estate, right? Consumer loans, credit cards, we're seeing all that so right now. Asset bubbles have deflated in some sectors. Yield curve inverted. Fed deficits are massive here. What's likely to come through here? Recession, slowdown, monetary, and debt defaults. We probably see that through there. But what's likely to happen here is, as it says here, position for a world of printing more money. And then if we see this level from here, this is where we are right now, according to ChatGPT, right? This is where we are right now. On the overall long-term debt cycles and where we are right now. So let me show you one thing I want to sort of walk you through here is noticing that while the unemployment is low, think about markets in cycles, right? What happens in markets in if you think about one of the best things I've learned over the last 20 years as a trader and even in an investor in these markets is understand this, everything goes in cycles. What does that simply mean? That simply means this. So I'll give you an example here. So back in the day, I say back in the day, if we look at gold here and we can see what's happening here, if I bring down, I'll take this off through here. So back in the day, everything goes in cycles, right? So what the retail investor does, or the retail trader does, they wait for markets to make big moves, then they wait for the hype, then they start to get involved with it. That's the reason why 90+% of traders, 95% of traders lose money in the markets. That one concept there, if you can flip it on its head, that simply means the markets that haven't been talked about a lot, the quiet markets, the markets that I'm not getting involved with, that's the market you should be focusing on. So the purpose of me saying that is that for me personally, as gold was going through sideways, especially all through here, I was saying if gold starts to break out, that's the market I want to be focusing on because no one's talking about it. No one's focusing on it. And so the thing is, just think about everything goes in cycles. Even this one here, which is this one here, right? We go from extreme fear to greed. We come back down here to extreme fear, and then it's a greed, right? Everything goes in cycles. So if you understand that, this is where there's a bit of a warning sign around the stock market, right? Because there's starting to become a lot more greed, at least on a short-term level trading basis here, right? This is short-term level trading basis, which means you're looking for an opportunity for last couple of weeks or a couple of weeks to a couple of months, maybe longer, of a trading opportunity, right? You're looking for it there. But understand everything goes in cycles, right? What goes down ends up then having a big spike, and then everything just, we know this, right? We know this. That's the reason why if we understand this, that, there, if we have a look at things like GDXJ, this is where I believe the GDXJ is doing what? See how we're starting to break out now on the GDXJ from here to here? We're starting to break out. What is this? Well, what's happening behind the scenes here? Why is this? And this is where like most traders are not, they're jumping in on hype, the AI stuff and so on and so forth. But to me, I'm looking at things like the mining sector. Why? Because when was the last time we went through a mining boom? All through here, right? 2010, 2011. So we spent all this time down the bottom here. Remember I said everything goes in cycles, right? We go through booms, we go through busts, we go through quiet times. Then we go through booms, we go through bust. Like that's what the cycle does. So while everyone's focusing on, the stock market or Bitcoin or gold or me, I'm like, okay, yeah, cool. But I'm now focusing on these other markets. Why? Because everything goes in cycles. And the smart trader and investor, if you're looking for good opportunities in the markets, you get involved with things that haven't done well for the last many years. That's the reason why I was getting involved with gold early last year. That's when I was really getting involved with gold, and I did really well at a gold from that there. That's when I was really in there. But if you look at, say, for example, the gold mining sector on an overall basis, this is a weekly chart here, but on an overall basis, right? What's going to come over the next 5-10 years? We do know there's going to be another mining boom, right? It's not like there's never going to be another mining boom. Especially what's happening right now, right? You do know that, right? It's not like there's never going to be another mining boom. But if we went through a big boom through here, and we understand that everything goes in cycles, if you guys have been, if you guys are in your 50s and your 60s, you guys know, you know this from a logical point of view. You see it happen time and time again, right? There's booms, there's busts, there's booms, there's busts. So if you can take advantage of this bust, and the markets, most people are not talking about the gold mining sector, right? This whole gold mining sector from here, to me, is a gold mine. No pun intended. Now, gold itself and gold mining stocks are separate. Don't put them together. You guys are going to fight me all the time. But gold has already made a very big move. It's already broken out and had a very big extended move, right? Gold mining stocks are still basing down through here. And I believe we're just getting started all through here that we've actually seen from there. And so the reason why this here is because, one, we can see everything goes in cycles. So you want to get involved with things down the bottom here and then be patient and wait for the breakout, just like gold, right? And then so that's what happened there. And on the fundamental level, you do know there's going to be another mining boom, right? And whenever the mining boom happens, guess what? This is the reason why I'm focusing on things like the gold mining sector. Now, individual stocks, that's totally up to you. But on an overall basis, that's what I see happening from there. Makes sense? So the purpose of me saying this level through here is that if we look at this is the unemployment rate. Understanding that, what's going to come soon? What do we know that's going to come soon? It's not like, oh my goodness, like if you guys have been around the markets less than 5 years, I'm trying to show you what's taken me 20 years to understand. So you're not freaked out about it. You just know that this is the way the economy and everything goes. Everything happens in cycles. Right, there's nothing. It's not like, oh my goodness, the unemployment's going up. Of course, the unemployment's going to start to go up. In fact, it's already started to go up. Look at the last 3 years. We were down here around 3.4. Now we're starting to slowly crawl up. This is called what? This is called an uptrend. Right? It's already for the last 3 years started to crawl up from here. But if you look at it from a larger perspective from here, so what do we know that's going to come soon? Right, we do know we're going to get a bit of a spike here, right, soon. So it's just going to happen. We can see it happening right now when it comes to the Ray Dalio and the big debt cycles and the big debt crisis, as and all that sort of stuff. And this is where we can see things from here. And so as this starts to unfold, understand where we are in the stock market, that not everything happens straight away, but my goal is to warn you about what's to come. On a short-term level basis, yeah, we're probably going to get a really nice big drop to the downside. The fear index is going to come down the bottom here. When that happens, then everyone's going to do the exact same thing as they did back here, which is what? Which is, as the market starts to drop down to here, we form a higher low, we go back up. Right here, the fear index is going to be pinging at extreme fear. The recession talk, but smart traders like yourself now, and smart investors like yourself know that's probably going to be a buying opportunity, but the next leg up is then probably going to be followed into probably a bit of a bearish year, I would say. This is my guess, probably a pretty bearish year coming into next year from that there, but I don't expect another 2008. Right, so while we see short-term drop, yes, the top's in, the breakdown has already started, and here comes the recession. It's already started there. I do believe we're in this one last leg from here. But then and the reason I'm telling this you, for you guys that are long-term investors, even traders, look for the next year, what's likely to come next year of this big massive recession, right? The whole thing about what I just said there is amazing. Why? Because when that happens, you've got to see so many amazing buying opportunities. Understand cycles, right? Drop, recession, fear, Fed print money, market go boom. You understand that? So understand all that simple concept there. If you can just be a bit more patient, and this is where, like, if you're just focusing on day trading right now, you're missing so many opportunities that can make you a fortune by trying to look for something that you can get into, hold it for maybe 6 months, maybe 12 months, maybe a bit longer than like a day trade, right? A 5-minute trade. That's one of my biggest mistakes that I've made over my last 20 years of trading. And I'm not doing that anymore. My trades now, I like to look for trades that I can be in it for at least a few weeks, right? My best trades are when I can be in it for a few months. Like, for example, I'll give you an example here, right? So for example, platinum. Platinum was one of my trades that I got into recently, and I got in on the breakout, and I was actually in this I'm out of platinum now, but I was in this here for about a month, I think it was. So I got into here. I got into there, and then I got out through, I think it was right about here somewhere. So what was that there? Yeah, roughly about a month from there. But that's, as you can see, right? I like to get into things. So right now is the wrong time to be getting into platinum, right? When was I getting into platinum? Down here. Why? Because it come off the back of doing nothing. See the same cycles, right? The same. When the market's done nothing for many years, and then we just start to break out, that's when you want to start to get involved with it. Amateurs see this as boring, but you see it as opportunities. That's the same thing for, once again, gold, right? If we go back to gold, you can see the same thing for gold. Gold did what? Nothing for a while, and then we have a very big boom for a while. So the whole big cycles and what's happening here, guys, there's so many opportunities. And my whole thing around this coaching video is to stop you from getting into bad things. Understand that everything goes in cycles, and your thoughts, your emotions, your hopes go into things. But if we step back, see reality as it is, not what you hope it's going to be, and therefore you can step back and say, oh, okay, cool. Reality means that everything goes in cycles. If we've already had when we have a very big move, even in gold, we end up getting pullbacks. Very big move, we end up getting pullbacks. That's how cycles are. Right now, the unemployment rate is now getting very, very low. We're probably going to get a spike over the next 12 months. That's what's probably going to come because it's a simple cycle analysis. The fear and greed index is right now at extreme and getting close to extreme greed. When that happens, there's probably going to be a drop in the markets that's going to freak people out because now you see what everything just goes in cycles. But that's a good thing because when we start to see this, we start to see so many amazing opportunities just by flipping it on its head. And then we can start to take advantage of these opportunities. And that's what the top 1% of all traders do in this market. Hey traders, just a quick heads up. I'm actually giving away free access to my Mastery Trading course for a limited time. If you go to johnsfreegift.com, or there should be the first link in the description. The fact is that 80 to 90% of the stuff that you learn or you use on these trading platforms is a complete waste of time. And only about 5 to 10% of the stuff that you actually learn and use is going to move the needle in the positive direction for you. And that's over the last 20 years, I've put everything that has helped me move the needle in the positive direction in this here, and I've left everything else out. So go to johnsfreegift.com right now and grab complete free access to this Mastery Trading course.